Asian trade. Well, joining me now from the CME Group in Chicago, as promised, Tim Evans. He's Chief Market Strategist at Longleaf Trading Group. Good afternoon to you. Thanks so much for taking time out of your day. Now, markets in the States just closing. All in all, what do you make of the performance today, considering, financials were really being knocked around a bit on those Fed hike expectations?
Yeah, thanks for having me on your show as well. Yeah, today was a pretty eventful day. To kind of put in a broader context, we had a manufacturing ISM number last Thursday that was very poor, followed by non-farm payrolls on Friday. So when we saw that non-manufacturing ISM number post this morning below 52, which was well below what the market was looking for, yeah, a lot of disappointment spread throughout the market. The U.S. dollar sold off aggressively.
Certainly was an aggressive sell-off. So in your view, is this the market really coming to terms with the fact that, since we had the Jackson Hole meeting, the run of data has been relatively weak, even though we continue to have these hawkish Fed speakers come out? So were those hawkish Fed speakers, over-prepping the market for the likelihood of a hike in September?
Well, that's the interesting dynamic in my view of this whole thing. In my view, Fed credibility is what is really on the line. They've made it very clear that they intend and they want to raise U.S. interest rates by the end of the year. But that window of opportunity doesn't last forever. They only have a couple of meetings in which they can do it. So, if they're using weak data, as an excuse not to raise rates, the market again will begin to question the very credibility of them raising rates at all.
Okay, and so what will that do for the market? Because, bad news sometimes is good news for the market. There is no other alternative. Money keeps pouring into equities, but is there a time when that sentiment toward that equation really starts to turn?
Well, I think we're already seeing that now. If you kind of look at the global market environment currently, U.S. stocks are performing, very well. Almost near all-time highs and with very low levels of volatility. And that's not a reflection of, investor sentiment with respect to U.S. companies. Really what that's a reflection of that there's no good alternatives in terms of investment options. And that environment, in my view, is created by broad-based QE in Asia and Europe and from the United States, and with artificially low interest rates. So, I think that raising rates in the long run would actually be very helpful for the U.S. economy and the global economy as a whole.
So when it comes to, I guess, some of the other news points of the day, we had a couple of really big M&A deals. M&A Monday, as one of our earlier guests said, changed to Tuesday this week because of the holiday on Monday, of course. We had that $28 billion deal being done between Enbridge and Spectra. What does it say that even those big deals, Bayer and Monsanto, wasn't enough to really, I guess, move the markets even higher?
Well, there's so much uncertainty in the market. At the end of the day, the one thing the market's going to need in order to, consistently go higher over time is earnings. You can boost earnings through mergers and acquisitions or other means, but, at the end of the day, organic growth is really what the market's looking for. And, I think it's kind of difficult to find, and you're seeing that reflected in price action across all asset classes.
So where are you looking to invest money these days, Tim?
Well, there's given kind of the depressing nature of a lot of the commodity markets, we're really looking for value. We think the U.S. grain markets potentially provide a decent opportunity as we're moving into harvest. We're only, a month and a half out from the soybean harvest, and, estimates in the U.S. are big. We're potentially looking at a record crop. USDA, as of August, had the expectations at 48.9 bushels per acre. Some private estimates are over that, even over 50. But, we're also seeing a lot of Chinese demand that's, drawing out a lot of that supply from the market. So, our view is the market is already looking for this very large crop. But with the Chinese demand kind of underpinning the market, all it's going to really take is, a marginal difference or a negative change in yield estimates. And I think that could have a substantial change in terms of the price, and that's potential upside movement. So that's an interesting opportunity that we're looking into very seriously at Longleaf.
Okay, well, it's a big week this week as far as, I guess, overseas central bank action. We had the RBA here in Australia yesterday. We have the ECB. and later down the track, of course, the BOJ and the U.S. Fed. But we do have weekly mortgage applications, JOLTS data out tonight in the U.S. and the Fed's Beige Book. So what will you be trolling through those releases to find that will help inform, I guess, your view on when and if the Fed will hike this year?
Yeah, I mean, in my view, there's no one kind of silver bullet that's going to, let us know yay or nay on whether the Fed will move. It's kind of all these numbers and kind of as a group. Really, are we finding new trends? Because what we were seeing consistently better ISM, both non-manufacturing and manufacturing. We were seeing better jobs numbers. We had some retail sales numbers that looked pretty good for a few months straight. And then all of a sudden, we start to see all of those numbers weaken. So are we going to continue to see that, in retail sales? Are we going to see it in mortgage applications and all the home numbers? And if that trend continues, yeah, I mean, the likelihood of a Fed rate hike in the near term is reduced.
And anecdotally, I mean, you're there, you're living there, you're shopping on Main Street. What is your sense about whether the U.S. economy can, in fact, handle an interest rate hike?
Well, to be honest, I'm more of an internet shopper, but I guess there are some folks still that shop on Main Street. But in terms of what the U.S. economy can handle, I mean, the U.S. economy is very resilient. I mean, I think what the market, what consumers need, what employers need, what business people need is an understanding of what we're going to be dealing with in the future. This forward guidance that's really murky and so data dependent and it can change on a whim, it just doesn't allow producers, to make long-run decisions. And those long-run decisions are what yield growth in an industrialized, developed economy. So I think we need to, have a better understanding in terms of what we're dealing with and can have confidence in that fact.
Okay, Tim, it's been great talking to you. Thanks so much for joining us.
Thank you, Nadine. Appreciate it.
Tim Evans is Chief Market Strategist at Longleaf Trading Group, and he was joining us live from Chicago.